Hi, everyone, and welcome back to yet another SocoChain episode. We're a platform where we explore the people, the ideas, and the innovations that are shaping Africa's blockchain crypto ecosystem. I'm your host, Faith Nyambura, and today we're diving into a really important conversation. We're talking about Kenya's growing role in the global crypto adoption and how regulation, innovation, and the real-world use cases are shaping the future of digital finance across the continent. Now, to give you just a little bit of context in our conversation today, where I have Larry Cooke, who is the head of legal at Binance, to just give you context about Binance. Binance is currently the largest crypto exchange in the world, with over 300 million users globally and having processed more than 34 trillion in trading volume. On a daily basis, Binance handles tens of billions of dollars in transactions, making it one of the most important pieces of infrastructure in the global crypto ecosystem. As I said, our guest today is Larry Cooke, who is the head of legal at Binance. Larry works at the intersection of regulation, innovation, and helping navigate the evolving crypto landscape across Africa. So, Larry, welcome to SocoChain. We're glad to have you here today.
Thank you, Faith. Good to see you again. Glad to be here on behalf of Binance. Another opportunity for us to connect with our Kenyan users. Kenya is my second home, so always good to be part of the family and the community. And yeah, good conversation is always key for moving the dial forward. So thank you for having me.
You're welcome. Now, as every podcast starts, and I've listened to a couple of sessions that you've joined, but out of curiosity, everyone wants to just have a backstory of where your crypto journey started. So if you can just take us back as to when was the first time you heard about blockchain or crypto, and what really made you stick around and want to build a career within the industry. Tell us your story.
Faith, such a good segue. My story isn't that interesting, actually. It's a story of accident, a story of where God puts you, you just need to pick up the call and start serving. So traditional lawyer background, starting from Weber Wenzel. Yes, a small town in South Africa, never ever expected I'd be at this type of intersection in my life, to be honest. So really, really privileged and thankful and, to God and all those that help support my career, etc. But that's, I guess, humble beginnings. First time I heard about blockchain and crypto, quite interestingly enough, was when I was at ABSA. So from Weber Wenzel Attorneys, went to ABSA. ABSA at that time was still becoming Barclays, Barclays Africa Limited, and Barclays had a major footprint across Africa, right? And Barclays was embarking on a project called Bank the Unbanked, and there was one technology service provider that had blockchain in their name, and it fell across my desk, and I was assisting with the deal, and that's where I first saw the word blockchain. Before Satoya, before BNB, before Bitcoin, before all of the media hype, and that kind of became a side project where I kind of started speaking to industry players, joining certain community forums and trying to understand. And then as Bitcoin grew, blockchain grew, distributed ledger technologies became a bit more interesting. And I kind of self-learned what is the blockchain, how does it work, etc. Became quite topical. More suppliers, more vendors, more service providers came into the realm. And that's kind of how it was, always on the side of my profession, but it wasn't mainstream, right? And then was at ABSA for a long time, for nearly 6.5 years. And then went into the central bank, South African Reserve Bank. And there I was looking after a lot of numismatic coins, the entities that create the numismatic coins and printing money, advising also the financial crimes, unit, and then the fintech one, which was more interesting. Most interesting is because at that point in time, the IFWG, the Intergovernmental Framework. I'm messing up the acronym, but basically, it's all different government agencies that work together to try and spearhead fintech and the regulation around that. And I found myself drafting legislation around or contributing to legislation being drafted around regulating the space and engaging with the FSCA. And that's kind of where, again, it was still on the side. It came a bit more focused, but still not there yet. Until I eventually got a DM from someone on Binance, and they were like, "Do you want to work for us?" And I was like, to be honest, I never knew Binance back then. I never had a crypto, never had a digital wallet. I never had any cryptocurrency. A friend of mine at Apsil once was telling me to buy Bitcoin when it was still like 10,000 Rand. I wish I listened to him, because now it's like 2 million Rand or whatever crazy number it is now. But that being said, I eventually looked into the offer and went down that rabbit hole. And yeah, no regrets. I've been here at Binance for 2.5 years as the African head of legal, wearing multiple hats at points in times, dealing with very interesting matters from kidnappings to regulatory reforms, really a slice of every single pie. I'm just really thankful for the experience and exposure, because it's been really good to serve such a rich, diverse community. Crypto assets, digital currencies, tokenization. It's just such a layered, multiple layered industry. That's not a sub industry, let me say that, because it's all attached to the financial industry. So it's been very, very good. I guess that's a bit of my backstory.
Your backstory is very interesting. And when I talk to people who have transitioned from traditional finance and into the digital space, it's usually very interesting to hear from them, because it's traditional finance as we know it is people are very reserved, because we're used to a certain way of doing things, a certain way of how money moves into the systems. And now moving into digital finance, where money is moving faster, the transactions are cheaper. Like it's completely different in a way, if you compare the two. You sit at a very interesting intersection. And it's very interesting that you said you also worked at the Central Bank of South Africa. And so you have a little bit of understanding of what regulators, how regulators operate. So what is one of the biggest misconceptions that regulators still have about crypto? And this is not in relation to South Africa or to Kenya, just in general. Like, what are some of the misconceptions that you think they still have?
Yeah, thanks for that question. Yeah, look, I think all the different experiences have brought me to this position where I think it's almost like the perfect fit, right? Because being on the one side, you see the problem from one side, and then being on the other side, you get a different perspective. So I think when we kind of say misconceptions, it's not intentional. I think that's the first point of departure. It's never intentional, because it is a new space. As old as it is, a few couple of years ago, it wasn't as evolved as it is, and there's so many amplification of risks that take place because of one thing having changed in a bigger microcosm. And I think for regulators especially, which I have so much admiration for and appreciation for the role that they play, because their primary mandate is centered around stability, right? It's not just about looking at innovation and the new trend and what's the latest and what's the greatest. They really have to walk slow. It's almost like that elder that you'd walk with. You want to run and jump as the young, youthful person, but then there'll always be someone in the background that's like saying, walk with caution, and you need to lean on that with that wisdom. So I'm going to change it from misconception, and I'm rather going to say the concerns that they still need to demystify, right? Relate specifically or primarily around the reality of digital assets. because they don't have the exposure in terms of how it operates, like the business operational use cases, how users, customers, everyday people engage and rely on these digital assets and need it for betterment of their life, not just business making opportunities, but just for betterment, just for uplifting and growing from where they are. That sometimes isn't the focal point or as readily seen by regulators. I think there's when we talk about these misconceptions, it's like regulators look at things through their regulatory framework, and sometimes they miss the point where they see that this operates or this space exists outside of a regulatory framework, or it exists outside of or it's a new system. Let's say that, because ultimately there's nothing new in this world. It probably just changes shape, size, speed, velocity, a lot of those type of things, right? But ultimately you serve in a need, and once a need needs to be served, you kind of need parameters around that. So, and I guess one more other misconception that I also see in these conversations is that a lot of the assets, but digital assets, are kind of like categorized as one thing, where there's so many subcategories of digital assets. You tokenize real world assets, you have stable coins, you have meme coins, and if there's just so many different elements to it, each of them need to be discussed. Not all of them are purely speculative. Speculation in itself, I think it's something that's derived from the existing traditional finance world. So again, crypto has like made up new risks. It's just fallen into certain categories of existing risks and have maybe amplified them a bit. So I think those are some of the stuff that the regulators are dealing with and challenged with. And I also see a lot of progress that they're making in terms of kind of coming to terms with these concepts.
Yeah, certainly there's a great progress. More so when we look at Kenya, where I am right now, it's like we are operating in a completely different space as we were operating last year, same time. Right now, we are operating in a regulated environment, and we will get into that. But I just want to echo what you've said in terms of these misconceptions. It's not because it's a vague environment. It's new. And like every other thing, even borrowing from here in Kenya, when we were in the era of mobile money adoption, it also took a bit of time, and also with the regulators and them understanding what is this? What do you mean now people are gonna move money on their phones? It's a new concept that is being introduced to them. And as you've said, it's all about stability. So they need to look at it from that perspective, and also look at it from the point of protecting the consumer. So now where we are, Kenya has consistently ranked among the top crypto markets globally. So you've had experience in the Kenyan market. You've been here a couple of times, and you've interacted with different key players within the crypto ecosystem in Kenya. So from your view, from where you sit, what are some of the things you'll say have really played part in pushing for Kenya to become among the top markets in crypto?
Yeah, thanks for that, Faith. So a good question. And yeah, I say it with as less bias as possible, but I think Kenya has done exceptionally well. Like, there's so many elements to it. I mean, besides the community, the population, being able to adopt and understand the concepts and move with them, I think, and again, maybe it's also because of the platform that mobile network operators like M-Pesa, foundation or set a foundation on top of traditional banking. Maybe it's because of that adoption that the adaptation was a bit easier with Kenyans. But the mindset is always such a good starting point to adopt anything, right? And I think Kenyans have that mindset, from the users to the regulators being more embracive, more inviting, understanding, wanting to engage with stakeholders, making it possible to have complex and tough conversations at times, and still willing to press on and find a middle ground. I think Kenya has really led the way in terms of setting that new standard for how regulators should embrace rather than avoid these difficult shifts in eras or shifts in industries. I think besides like the smart population of the tech savvy population, the youthful population, the infrastructure gaps that actually play towards an advantage of why this use case makes sense, the regulators as well, as I mentioned. I think there's also always this high need for or demand for faster, cheaper payments, right?
Yeah.
Not just payments locally, but externally, and it's not just new to Kenya. And that's something that really has put Kenya in this role of being a key market. You also see Kenya's inter-regulatory relationships also quite notable, because I mean, just recently Rwanda and Kenya entered into an MOU for exporting, passporting of licenses, which is amazing. As something that we've always been advocating for especially from an African continental perspective, which we want to see a bit more cross-border synergies and collaboration, so to say. And wherever we can, as Binance, kind of play in those gaps and kind of bridge those gaps, we always try and play our role. But yeah, Kenya is just absolutely phenomenal in terms of positioning, in terms of its projections, also being able to not just like do Kenya for Kenya, but do Kenya for the world. I think there's always been this phrase of being, I don't want to mess it up, it's called Kenya Tech Savannah or Tech Safari, not Tech Safari. Silicon Savannah. Yes. So I think that's always been in its DNA, that's always been its outlook, and you need to have a vision to follow and pursue. And I think that's something that all the people of Kenya rally behind, and that's why they're doing so well.
Certainly. And yeah, we proudly call ourselves the Silicon Savannah of Africa. Yeah. So you've mentioned about the MOU between Rwanda and Kenya and like the whole passporting of trade. Now, away from that, when we look at Africa and how we do our trades or how we do our cross-border payments, and that's one of the key area when it comes to crypto, because sending money across African country, it's very expensive. And you can attest to this coming from traditional banking system and seeing how money moving, let's say, even from South Africa to Namibia, or even from Kenya to Tanzania, like countries that are the proximity, they're close to each other, but it's still expensive. And we're seeing cross-border payments with stablecoins being one of the major use cases of payments in Africa. So from where you sit, do you think stablecoins are changing the way people move money across borders? And are you seeing this playing out in different, in a different reality, not only for cross-border payments or remittance, or even like what other ways are you seeing that we can be able to use crypto when it comes to how we communicate or how we interact as Africans?
Yeah, that's a very, very big question, Faith. I'll try and unpack it from a couple of perspectives, right? You spoke about remittance and just generally cross-border payments. And I think that is a real reality and probably the biggest use case of why stable coins, cryptocurrencies make sense, because one, they solve for real world issues, right? One of them is that as Africans, we move around a lot. We study, we go abroad, we have families in different countries. Africa's always been such a diverse and rich culmination of different heritages that span right across the globe. So in that framework, you find that if I need to send money to my brother, my cousin, my sister across different borders, how do I get it there? If I want to study or expand my boundaries, businesses, investment opportunities, how do I enter that global market? And the main gatekeepers of that have been traditional finance, banks, because even mobile network operators, they're kind of limited in terms of the corridors and the amounts that they can kind of facilitate and the integration in terms of different merchants. So there always has been these barriers that haven't allowed, I want to say, countries with weaker currencies and infrastructure to kind of engage with the international playing field that kind of had a bit of a head start for other reasons, in the African tale of how we got to where we are. And stable coins and cryptocurrencies based off the concept of decentralization and democratization, right, has enabled a cheaper, faster, and more secure means of bridging those challenges, those obstacles, those bridges that kind of have prevented Africans from integrating. Remittancy, again, saying being one of the first one, because I need to be able to send money. I don't want to send, if I had to send you, Faith, $100 from South Africa, by the time it gets to you, you'll probably only get 80 or maybe even less, depending which channel I'm using. But then even the concept alone, why do I need to send you $100? Why can't I send you rands? Why is rands not, you can't use rands in Kenya and you can't send me shillings? So there's like so many concepts that stable coins just bring into light, and cryptocurrency and using it for remittancy brings into light. And those questions have kind of become a bit aged in traditional finance because they've been there for so long. And now with digital assets, it's kind of gotten a new spotlight. So we're still asking the same questions. Why is it so difficult? Why is it so expensive? Why has there not been better collaboration between different governments? And how is the friction between cross-border transmission remittances being perpetuated? And one, the technology solves it because the trust, the efficiency, the ease, the visibility, the low cost of it solves for it. But then it starts also asking to solve the bigger issues, which is around integration, which is around collaboration, and really creating a more Pan-African centric system. We have like payment African payment settlement systems, off the cuff of the African Continental Free Trade Treaty. You have certain blocks where, like the Common Monetary Area, South Africa, Namibia, Lesotho, so you see that it's a bit fragmented in terms of the potential and the possibilities. And here comes this new kid on the block that's always kind of been on the block. So I'm gonna say this, and now kind of joined. So yeah, I guess that's what some of the real world use cases now allow for. What allow for. And yeah, I think, like you also mentioned, I think about the expensiveness of it. Wherever there's an issue, it almost kind of begs for a solution. And crypto might not solve everything, but it definitely solves and raises the question to say, why can't we and how can we solve for these challenges that we're experiencing?
Certainly. I like one thing that I really love about crypto and the different areas of crypto is that they're really solving the key pain points that we go through as Africans and as a people in general. And finding solutions to those problems it should be the driving force, and wanting a better place for all of us, wanting better systems for payments, wanting cheaper, faster, secure, all those factors considered, and implementing them and moving, and now finding other problems to find solutions to, But on to the key area of focus right now, more so in Kenya, is regulation. And right now, as we speak, there is the VASP, the draft of the VASP bill that is going around. I'm sure you've come across it. That is going around for people to engage and give feedback and get ready for the public participation that is later, I think, end of this month or early next month. So from your perspective, what good does what is good crypto regulations in general? You've looked at the regulation here in Kenya and also in South Africa. From where you sit, what would you say is a good crypto regulatory environment?
Now, excellent questions. I kind of want to call all my regulatory friends and say, listen in. But yeah, I think, look, regulators are very smart. I always say, like, people kind of look at the regulators and say, oh, it's like you almost like created an identity of a regulator in your head. where you don't appreciate the fact that a regulator consists of a lot of smart, incredible individuals that, you know, contribute to this collective understanding of regulation. And that being said, I extend it wider, right? Kenya has its act that's in force, right? But then and it's now the regulations that's been looked at. The regulations obviously giving life to the act, so it's kind of just complementary and just gives a bit more detail. But even before the regulations for crypto specific are there's already supporting legislation. There's data protection, there's consumer protection. You know, there's AML, anti-money laundering, and law enforcement related legislation. So legislation is not disconnected, it's all connected. There's always legislation. I always give the analogy to say, if you have a parent, right, you have a mom and a dad, or mom or just a dad, whatever the situation is, right? Just because they never gave you a new set of rules, like don't kick the window or don't throw the bed or whatever, don't do something, right, doesn't mean that it's not your parent and they can still instruct you at any point in time. So you always need to kind of take that approach that whatever activity you are doing, you are regulated, and kind of walk towards that, like, I am regulated. And then the instructions, when they come, you'll find that your mom says, don't do that. You're like, I'm already not doing that. So you kind of avoid it. So, and that's kind of a segue to say, what does good regulation look like? Good regulation looks like understanding the behavior, understanding the activities, and then shaping it around that, right? Because there's always this thing of technology and everything else advances and then regulation slow to catch up. So good regulation needs to be a bit more flexible. Good regulation needs to be more realistic. Good regulation mustn't be stifling, but at the same time, good regulation needs to be secure. Good regulation needs to be robust. Good regulation needs to be able to, you know, catch the bad guys and stop the bad actors and promote good actors. So getting the balance is so difficult. It's so difficult. But I think taking a page out of, you know, South Africa's book, taking a page out of Kenya's book, taking a page out of even Mauritius and Seychelles and Nigeria and Ghana and, you know, all the other countries that have put legislation in, even the countries that have maybe taken a bit more of a hostile approach towards crypto, like Algeria, right? There's always something that you can appreciate for why that regulation has been shaped in such a way, and that take pieces of all of those regulations, you start seeing it, right? So there's no one word or one thing that makes good legislation, but I definitely say it's always in the process. The magic is in the process, because if a regulator is engaging the stakeholders, if the stakeholders are honest and open and transparent with the regulators, right? Win-win. It's a win for the consumers that we both are interested in, both regulators and the commercial teams. And that's kind of where you find yourself in. So that's what I'd say good regulation looks like. It's about being open-minded, it's about being collaborative, it's about understanding each other's different mandates and working towards a common ground in the best interest for the community, not just for one party.
As 100%. I couldn't agree with you more. And we're seeing that with even the different parties that are regulating the CBK and the CMA here in Kenya, and even with the input from the different stakeholders, Binance being one of them, and just seeing how we're all coming together because we all have a common goal, as much as it might be different from a regulatory perspective and a stakeholders perspective. But at the end of the day, the goal is the same. We all want the same thing. We want to operate in a secure space. We want to ensure that we're offering good service to our consumers, and that's what also the regulators are doing, because the citizens are the regulators' customers, right? And they want to offer them good service, and vice versa when it comes to stakeholders. So I wouldn't add or subtract anything from what you've said in regards to what good regulation is. All those factors need to be considered. So from your perspective, Larry, how significant is this moment for Kenya's crypto ecosystem? Because as I mentioned, the act now is out. Now it's in circulation for public participation. So we are gearing in towards now operating fully in a regulated environment, hopefully by the end of the year. So what does that mean for the Kenya crypto ecosystem?
It's a very good signal to the international market to say Kenya is open for business. Start attracting a lot more foreign players to open up shop in Kenya. That means more job opportunities, more stimulus for the wider economy of Kenya, more investment. It means more skills transfer. It means a lot of good things. But what it also then puts on is saying, Kenya, are you ready for that capacity? Do you have that capacity? Are you ready to embrace that type of change? Because it means that the standards need to be higher. You need to also make sure that the opportunities are more distributed. You also need to deal with making sure that the environment is not just focused on attraction, but it's also education. How are you making sure that you bring everybody in the different villages all the way to Naivasha and probably beyond Naivasha, everybody having the ability to understand what this crypto world would look like and how it impacts them and what's the benefits for them and what's the risks to be mindful of. With great power comes great responsibility. I want to kind of lean on that cliche, but having the VASP Act now talks to, okay, we have the structure, we have the framework, but how do we get the implementation right? Who are the partners that we can learn from? Who are the partners that we need to ensure are part of the ecosystem to kind of keep the know-how local, but also learn from international best standards as well. So I think that's what it really means in its truest sense, or at a 10,000-mile view. But when you start looking at it from a granular perspective, I think it's really life-changing. It gives opportunities to people that might not have had opportunities previously. Everybody talks about how the traditional finance industry is so old, and there's no opportunity for the youth, etc. And here's a perfect booming, blossoming industry or sub industry, that's now given that opportunity for us to make the most of it. So one, at least by Binance's standards, we make sure that the value that you bring into the table isn't just for yourself, but everybody at the table needs to similarly bring that value to the table. And I think that the regulatory space and having legislation is the same. The regulators have done something. Now it's time for the industries to do something, the industry players to do something, and all the other sub-industry players to also do something. It's really, at the end of the day, an ecosystem that's symbiotic in all sense. Everybody feeds off each other and dependent on each other, and we all have to make this work. So, I think Kenya is now going to start leading the way in a lot of aspects. They're going to start directing certain trajectories, especially in the East and the rest of Africa. And I think it's a good opportunity and a good time for us to really observe, but also roll up our sleeves and get into work.
Sure. I want to just dive into another question tied to that. And I feel like you've partly answered it, but from all that you've said, like about the clarity that we have right now in regards to regulation, how does that influence how the big players like Binance approach now the Kenyan market?
Very good question. So look, we've been engaging the regulators, and we're really thankful to the regulators for having us and hosting us, and having the bandwidth for walking this journey with us. But at the end of the day, businesses run on numbers, so if it doesn't make sense, like from a tax perspective, it's quite what's the word, challenging, because you kind of have to measure out and say, does it make sense for me to make this country my regional hub if I'm not being as accommodated? And not to say that we want preferential treatment, because law applies to everyone, but the environment isn't as conducive, right? Because, and again, these are the questions I need to answer to my business folk. Why go to Kenya with a tax rate of X amount versus Tanzania with the tax rate of a lower amount? Yes, it's a new industry. Yes, there's money in it, and people want to like, oh no, this is the ticket out. But you need to understand there's timing for everything. So those are key considerations. You don't want to put too much pressure on the big players as if the big players are going to be the silver bullet that solves all macroeconomic issues, or the big players are going to be blamed for everything. And it's always going to be the big player, because the big players are already taking up a lot on their shoulders in terms of stimulating the environment, in terms of distributing the technology, in terms of working with local partners, in terms of creating pockets of microeconomies that stimulate the wider economy, right? And if you overstress or overburden the bigger players, it comes at a rippling effect or a disadvantage of a lot of other players in hindsight. I always look at it like, if you look at the wild, right? If I look at the ocean, there's always like these big mammals, like massive whale, and you might want to say, oh no, because that's a big animal, let's do something big towards it. As an example, it's just very hypothetical. It's the best analogy I can give. But you don't realize that that whale creates like so many sub ecosystems around it, right? From feeding, from just so many things, and you need to kind of look at big players like that, and countries and jurisdictions that kind of get that balance right. Binance really welcomes those type of countries. And different countries have different strengths. I mean, South Africa has the maturity of its infrastructure and the robustness of its regulators. That's why it's easier for us to have opened up shop in South Africa. Now it's a question of, okay, how else can we expand? What other markets are ready? What other markets are embracive? And that's kind of where we find ourselves. There's no one size fits all. There's no, okay, this is the cookie cutter. This is what we do, A, B, C. It's always collaborative. It's always understanding the landscape and then taking it from there. You have to move on these momentous journeys one step at a time. And there's that African proverb: if you want to go far, you walk together. If you want to go fast, you walk alone. But you can fall quite fast if you're walking too fast.
That is quite profound. And as you were saying that, I was just like, for all the local startups that are here, would they listen to this conversation and be like, are the big players actually carrying a lot on their shoulders? Because you look at what some of the requirements that are there in regards to regulation, and they can be a little bit constricting for local startups, if we look at it like that. So from just your general perspective, do you think, like, with the regulation in place, it puts a risk, not intentionally, though, to exclude smaller innovators? Obviously, because they wouldn't put a law intentionally to shut down anyone. But then in an all-inclusive kind of space, and if we are weighing options here, do you think they are somehow excluded in the space?
No, that's a very good question. And look, I'm going to wear a couple of hats when I answer this: my regulatory hat, my Binance hat, my Larry hat. But I think problems cut across many different dimensions, right? So if you're talking about excluding startups, you can ask the question: what governmental programs exist that empower startups? What is the process of a startup? Do they have access to finance? What does a startup ecosystem look like in a particular jurisdiction? Because then when new industries pop up, it's like, okay, this new place coming to take our bread or our share. That's one way of looking at it. And the other way is how I presented it, to the fact that people don't know how many businesses and partners that Binance have collaborated with on a local front. Doesn't make the news. Even from something as simple as sponsoring a conference, you've just empowered the entire ecosystem in terms of from supply chain to distribution to media to KOLs to people that weren't going to have that opportunity from a traditional space. So when I say a lot is on the bigger players' shoulders, I'm not talking it as a one size fits all. I'm talking more so from Binance in terms of what I can say we've contributed to, where we've helped, from donations during certain relief efforts where we see it in different countries, and we've contributed to training efforts and having free Binance Academy, to the type of products that we provide, the campaigns where we discount. All of those things stimulate certain economies. We don't just provide services to retail customers, we provide it for businesses. We provide crypto as a service, right? Crypto as a service where we provide infrastructure so that SMEs and local players can build on top of us. We're not looking for it. We're not looking for being the one size fits all for everyone. What we want is a collective growth, mass adoption. We want everybody to work together in the economy, and it's not by design that became the biggest. I always say that, like, we're only 8 years old. We're still learning a lot of things, but we're clearly doing something right. Our product is definitely certain of a certain quality that people can copy from and learn from, because that growth never happened by accident. Those type of growth don't happen by accident. I mean, we have over 800 different compliance and legal professionals that we employed in Binance, ex-Interpol, ex-Europol. We're trying to set a standard that's global, a standard that's something that can be looked at and learned from. And that's not prideful or boastful. It's rather to say that we need to, and these type of shifts help the regulators look at the industry more serious. So as much as Binance is opening up the door for Binance to come into a country, it opens up a bigger door for every other person that's behind us to come in through. It's not like we open the door and close the door. So I think there's enough for everyone to go around. And I always caution against looking at something a bit narrowed and say, oh, someone's taking something that belongs to me, or there's enough for everyone. There really is. It's, at the end of the day, it becomes a question of diligence, becomes a question of excellence. And at the end of the day, the consumers choose with their feet. If we're not seeing the consumers will leave us. We won't be the biggest. So we take pride in our users. We take pride in who we serve. That's why we make compliance as a competitive advantage. We always want to make sure that we're providing the best products. So I think it's a bit of both. But yeah, I do understand where startups come from, but it takes time. Binance once was also a startup. Just remember that.
Certainly, and I like what you've said. The cake is big enough for all of us. We just have to, look at it from a different angle and not, belittle ourselves or as startups, and look at the big players as people who have it all, or now they're at a better position to do certain things that the small players are not in a position to do. So yeah, that's really good. Now we are seeing a lot of international or global players looking at getting into the African market. So we're seeing there are quite a number. But what do you think, and this one you can answer without your Binance hat on, to be fair, what do you think the global players are seeing in Africa for them to want to come and, establish here in Africa?
Good question. I'll be honest with you. South Africa has 3 ingredients that most of the rest of the world doesn't have. 1, its youthful population.
Yeah.
Right. 2, the size of its population. And 3, the problems that it has. And the reason the third one, which is kind of like, did you just say the problems that it has? Yes, the problems. The reason being is because where there's problems, there's solutions, right? One of the stuff we gave earlier on is about how expensive remittance is. It's the most expensive in the world in Africa. I think it's such an 8-9%. You have the instability of FX, that how it impacts local currencies. People want stability around that. You have multiple aggregator on top of aggregator. So those are big problems in Africa, right? And no one solves them. And therefore it becomes the biggest opportunity. And I think that's what places Africa, and why a lot of international companies are looking at Africa and saying, I want to go there, because they know that Africans are resilient, just as the people, as an economy. They know that we I want to use the word inherently are good. Like we are good bet. And I think the more the world kind of normalizes, and the more the sway of power kind of stabilizes, you start looking at everybody on a more equal footing, and the more elevated or more equalized Africa becomes, the easier it is to see what great opportunities exist. Our people, I say that, we're just as intelligent as the people in the West. You know, we're just as creative, we're just as, if not more, as innovative, etc. And I think those are unfortunate stigmas that have kind of also put us in the position where we find ourselves in. But as we see how embracive and how we've been evolving, those stigmas are easily mystified and rebutted.
Certainly. And I like what you said. And I've never had anyone mention the third point as one of the reasons why it's a point of entry. We don't look at our problems as an advantage. You know, sometimes in most cases, you look at the problems that we experience as Africans and we look at them from a disadvantaged point of view. And it's high time we start looking at them from we're privileged to actually have these problems because we can get solutions for them, and these solutions accelerate us. They bring they create employment and bring solutions and solve ton of the other problems that we have, which is really key for all of us to just have a different perception of what we are actually going through as a people, and also not look at ourselves as disadvantaged from the West. I was having a conversation with a builder yesterday, and he mentioned that Africans were very hardworking and he was referring to Nigerians and how Nigerians are very aggressive and how Nigerians are very busy, and even in terms of reaching out to them or even accessibility to just have anything. It can't be random because of how they're busy doing, you know, they're busy building, they're busy looking for ways to just make money here and there. And that's an advantage that we have not only in Nigeria, but also in Kenya, because you find the youthful population, we're constantly busy trying to build ourselves. And that's also, I'm sure that's something that the global players are seeing. There's ready market here. There are people who are open to working, and they're very, as you said, we have the same level of skills as them. We, if not better, we are, you know, we have the infrastructure in terms of the internet, electricity, and all of these things. So yeah, it shows why we are positioned the way we are positioned for them to come. Yeah, so as we wind up our conversation today, Larry, looking at where we sit right now as a country, so in the next, let's say 5 to 10 years, where do you see Kenya being positioned in terms of global adoption of crypto? With now, by the end of this year, we're going to be operating in a completely different sphere. So with that in mind, looking ahead 5 to 10 years, where do you see us operating in?
Yeah, no, I think 8 times 5x, 10x where Kenya currently finds itself. I think it's not just Kenya operating in Africa, but globally. I think you guys will be more influential. I think your seat at the table will be bigger. I think some of the frameworks that, if you guys get them right, will be copied and pasted by your neighbors. I don't want to mention them, but there's a few that look to you guys already as the big brother or the big sister, right?
Yeah.
So I think a lot more millionaires, in fact, will come from, if not billionaires, will come from Kenya. Nigeria is always in the race with that, always in the lead with that. But I think you'll start seeing a lot more key figures, key businesses, like another PESA, you know. And I definitely see Kenya being positioned on the Africa map and maintaining its position as one of the giant markets that is the go-to hub to start operations alongside the normal number ones, which is South Africa and Nigeria. I think Kenya deserves its position right up there, and that's.
So if you could leave policymakers, builders, and everyday users in Kenya with one message about the future of crypto under this new regulatory era, what will it be?
That's a good question. I would say it would need to be around closer collaboration, interregulatory collaboration, so that one, you can foster partnership from a passporting perspective of licensing, sharing common data, and really trying to help understand each other's frameworks, not just your own framework, because your framework at the end of the day is also attached to your neighbor's framework. So really it's about just increasing collaboration, being more engaging, and learning together. There's nothing wrong with saying, I don't know. There's nothing wrong with saying, come and teach us. And you will always be the regulator. It's like the parent-child relationship. We'll say you'll always be the parent, but sometimes the children do grow up, and then you sit at the table across with your parents and they become proud. So it's a journey, and let's walk it together. That's my part in short.
Thank you so much for your insights, Larry. So for anyone who is out there and they are looking into getting into crypto, where can they get learning materials? I know Binance, you have programs. If you can tell us about that for anyone who's curious about what Bitcoin, what crypto is all about, or someone who wants to expand their knowledge.
Binance Academy is the first place, I think. Go and have a look at it. Learn from each other. Go on to Twitter. Go on to YouTube. Don't believe everything you hear, right? But just cautiously go and just listen to the different opinions, listen to the different perspectives. Sometimes it's not even just about learning about digital assets. Learn about money. Where does money come from? What is money? How does it work? You know, surround yourself with various different skills and always stay relevant. You have AI, it's easier to kind of get access to these skills. So one thing I can say is learn. Binance has nice learning material on Binance Academy. And then join the Binance communities, speak to the other Binanceans and learn from each other. I think that's probably one of the best materials that you could have, is real life learning. Thank you.
All right, we've come to the end of our episode today. Thank you so much, Larry, for sharing your insights with us, especially at such an important time for Kenya and for the broader Africa crypto ecosystem. And to everyone who's tuning in, this is just the beginning of a new chapter for the crypto ecosystem in Africa, one shaped by innovation, regulation, and real-world impact. Do not forget to like, share, and subscribe to SocoChain for more conversations like this. Until next time, let's stay curious, let's stay building. Bye.